Hello everybody, I'd like to welcome you on our live market analysis webinar. But before we start, let me ask you one question. I'd like to confirm that you listen me properly and you see my screen. So guys who are now live, please confirm that you see my screen and can hear me properly. Just please type yes or plus in the question section so that I can see that you listen to me. All right, okay. And just a couple more confirmations to go. All right. At least I received the 10 confirmations that you can see my screen and you can hear me. And now we would start. My name is Yury Safronau. I'm an A2ZMarkets.com chief currency strategist, and I'm a person behind the daily free Forex signals on A2ZMarket.com. I have a PhD degree in finance, and I work as an independent equity manager. I have extensive experience in trading stocks, crypto, and Forex since 2009. First of all, I'd like to tell you that this webinar is sponsored by Forex4you. Let me briefly introduce you the company. So eGlobal offers main services online trading on more than 150 instruments under the brand name of Forex4you and copy trading investing services under the brand name Share4you. Before we start the webinar, let me briefly mention the disclaimer. Any opinions made may personal to the author and may not reflect the opinions of Forex4you. All expressions of opinions are subject to change without notice. This material is considered a marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation to any transaction in financial instruments. Forex4you makes no representation and assumes no liability as to the accuracy or completeness of the information provided, nor any loss arising from any investment based on a recommendation, forecast, or other information supplied by an employee of Forex4you or third party or otherwise. All right, guys. First of all, I'd like to tell you that we are going to analyze market with the help of support and resistance lines and moving averages. Before we start, I'd like to briefly describe you what support resistance lines are and moving averages are and how to use them, because the webinar is basically made for new learners, and probably some people are not familiar with support resistance and moving averages. That would basically take us like 10 or 15 minutes. So those of you who would want to know where euro would go this week, you have to wait at least 10-15 minutes until there is a little bit of theory, but I believe this would be very beneficial for you. So like 10 minutes of education, and then we start to analyze live market. All right. So the support and resistance, this is the basic information. The concept of support and resistance are undoubtedly two of the most highly discussed attributes of technical analysis. Part of analyzing chart patterns, these terms are used by traders to refer to price levels on charts that tend to act as barriers, preventing the price of an asset from getting pushed in a certain direction. Support is a price level where a downtrend can be expected to pause due to a concentration of demand. As the price of the currency pair drops, demand increases, those forming the support line. Resistance zones arise due to sell-off when prices increase. So once an area or a zone of support or resistance has been identified, it provides valuable potential trade entry or exit points. This is because as a price reaches a point of support or resistance, it will do one of two things. It will either bounce back away from support or resistance level, like you see here on the chart, or it will violate the price level and continue on its direction. Like let's imagine that the price level of 120 was broken and the price would go even higher. Most forms of trades are based on the belief that the support and resistance zones will not be broken. Whether price is halted by the support or resistance level or breaks through, traders can forecast on the direction and can quickly determine if they are correct. If price moves in the wrong direction, the position can be closed at a small loss. If price moves in the right direction, however, the move may be substantial. Okay? Then how do we find support resistance levels? A key support and resistance levels are simply zones where the prices on the chart have found it difficult to fall below or above, and often rejected any attempts to break those levels. Because of these reactions, they refer to key areas of the chart where institutional traders are likely to buy or sell their instruments, take profit, or place their stop around. So support and resistance levels can be formed in 4 ways, like you see on the chart. It's either psychological support resistance, pivot support resistance, the price action support resistance, or moving averages. So what does it mean? Let's see, the psychological support resistance occurs as a result of traders using price levels that end in round figures. Like on this slide, it's 1.20. It can be 1.10, 1.15 for USDJPY pair. It can be 100 or something like that. So most inexperienced traders tend to buy or sell assets when the price is at the whole number, because they are more likely to feel that the currency pair is fairly valued at such level. Most target price stop orders set by either retail investor or large investment banks are placed at round price levels rather than at prices such as 1, 20, 15. Because so many orders are placed at the same level, these round numbers tend to act as strong price barriers. If all the clients of an investment bank put in sell orders at a suggested target of, for example, 121, it would take an extreme number of purchases to absorb these sales, and therefore a level of resistance would be created. So how to identify psychological support or resistance levels? This is very easy. Basically, a trader looks for areas where the price of the asset ends in round figures, and then checks to see if the area has been respected as a support or resistance in the recent past. All right, the next one is pivot support and resistance. So pivot points, support resistance, are calculated by the application of pivot points indicator, which has been used by floor managers and professional traders for decades. So pivot points are calculated from the previous day's high, low, and closing prices. Using pivot points, there are 3 levels of support, support 1, support 2, and support 3, and the central pivot points and 3 lines of resistance are R1, R2, and R3. Basically, on this slide, you cannot see that it says S1, S2, S3, but I can tell you that the black dots, that's the central line of the indicator. This is basically resistance 1, this is resistance 2, this is support 1, and so on. If you want, later on, I'll show you on the live chart how the indicator looks and how to put this indicator on the chart. All right. So, however, the price action of the instruments will ultimately determine how each of these lines react. It's possible for a support to act as a resistance when broken, or for a resistance to act as support when breached. So how to identify pivot points? As I already said, you can apply an indicator on the chart. Basically, probably I would even show it to you right now. That's my MetaTrader. And let me just open a chart window in here, and we can go on 1 hour time frame. Then I'm going to insert indicators. All right, custom we choose, and it's going to be a pivot points. I'm sorry, where is it? Haven't I installed it in here? Or I believe this is new terminal for me and I don't see it here. I'm very sorry guys for that, but probably I need to install the pivot points in here. It's usually in customs, but this is a new trading terminal for me, but later on I'll install this indicator and show you how it works. Basically what you do is you choose an indicator, you click OK or apply, and then you see those lines on the indicator, which are on my screenshot right here. And basically you would see those resistance and support zones. And on this chart you see that they really work nice, because in here the price found support right here. It went to the resistance, stopped a little bit, then broke it and stopped near the next resistance. Then there was another day and the price also reached the resistance zones right here, went to the next resistance zones, and then corrected to the previous one, which now acts as a support. So the pivot points are really nice indication of support resistance, but however, I would honestly tell you that I don't really use it in my trading. Anyway, the price action support resistance. The price action can also determine where support and resistance occurs. If a particular price level has functioned as a support or resistance levels in the recent past, it's likely that traders will respect those levels when prices approach them. As the sentiment at the time may indicate a recent support or an oversold area, or recent resistance or an overbought area. On this slide, you can see areas that price action formed support and resistance levels. We can also see that the region where that used to be a resistance area eventually became a support area in here. Like you see, there's acted as resistance for a substantial amount of time. This is H4 time frame, and then when it broke this level, it started to act as support. In here you see the retest of this support level in here. Since support and resistance levels define areas where buyers and sellers of an asset either enter or exit trade positions, they are important when determining entry and exit points based on support resistance trade strategies. So how to identify price action, support, and resistance? Another quick way to identify support and resistance levels is to scan the charts to see areas where prices have formed recent support and resistance levels. If a bullish run terminates at the price level, like in here, you see the bullish run in here, but it was terminated by this red line. So it retreats before assuming another bullish run and terminates at the same time. Like in here, it stays for a substantial amount of time before breaking this level. So you can name this level as a resistance level. The same acts as a support. And as long as that level holds, it serves as a resistance. And once it's broken, it becomes a support, all right, like you see on this screenshot. All right. So the next slides show basically how to find entries with the help of support and resistance. So finding entries at support or resistance is basically very simple. We can use, let's say, what I would recommend is that obviously you follow the trend. There are different strategies, but I think that trend is your friend basically. And when there is a bearish trend, like on the screenshot, it's better to sell. Though you can see that there is a channel formed in here, and you could have bought it in here and closed it on the upper side of the channel, which would make you some profit. But my position or my attitude to such trading is basically negative, because I do prefer to follow the trend, and I recommend all my students to do so as well. So the basic trading method for using support and resistance is to buy near support in uptrend ranges or chart patterns, and to sell near resistance in downtrends ranges and chart patterns. It helps to isolate a longer-term trend even when trading a range or chart pattern. The trend provides guidance on the direction to trade in. For example, if the trend is down but then a range develops, preference should be given to short selling at range resistance instead of buying at range support. The downtrend lets you know that going short a better probability of producing a profit than buying. If the trend is up and then a triangle pattern develops or any other pattern, favor buying near support of a triangle pattern. So buying near support or selling near resistance can pay off, but there is no assurance that the support or resistance will hold. Therefore, consider waiting for some confirmation from the market is still respecting this area. Like for the confirmation, I use a stochastic indicator, like in here. You see that the level was formed even with this candle. So the first touch was right here. The second touch was right here. And then you see that the price approached a resistance level in here, and we could have sold. Probably it would have paid off, but at the same time, there is no confirmation from a stochastic. I consider a confirmation as received if a stochastic is staying in overbought zone. So the price approaches resistance and stochastic is staying in overbought zone. That's a signal for me to sell. I would sell it right here, and I have sold it right here when it approached a resistance level, and at the same time stochastic is in overbought zone. The same acts for if the trend is bullish. Let's say I would buy near support when stochastic is in oversold zone. So the next slide is basically showing you another example of how to find entries of support and resistance. If buying near support, wait for a confirmation in the support area and then buy when the price breaks above the high of that small consolidation area. When the price makes a move like that, it lets you know that price is still respecting the support area, and also that the price is starting to move higher of the support. The same concept applies to selling at resistance. Wait for a consolidation near the resistance area, then enter a short trade when the price drops below the low of the small consolidation. So when buying, place a stop loss several cents below support, and when shorting, place a stop loss several pips above resistance. Like on this slide, you see, so we see that the price faced a support zone right here. Then a consolidation started. The consolidation lasted for, let me see, it's 1 hour time frame. Let's say for a week. That's a fresh chart, USD CAD. And basically, when the price approached the support level, it retraced back, but then it broke the consolidation level. So in this situation, the resistance level, so these and as well consolidation. So I would buy it right after it broke this consolidation level and put my stop loss below support zone. Okay, and put my take profit somewhere there. From I do trade that the stop loss should be smaller than your take profit at least 1.5 times. That means if we had a stop loss of let's say 50 pips, we would go for 75 pips take profit in here, and it worked like magic with the Canadian dollar. All right. There is also another approach as well. Some traders prefer to buy when price comes close to support level. Please pay attention that that's the very same screenshot but only different types of entries are used. So the traders, some traders, I'm one of those traders, let's say, they are buying near the support level right here, and they are using a very tight stop loss, very tight, like let's say 10 pips, 15 pips, maybe 20 pips. And then they use a very high take profit level, like 5 times bigger or 10 times larger than the stop loss level. At some point, those orders, they can be closed by stop loss because the stop loss is very tight, 10, 15, 20 pips. But eventually, when price pulls back from this support, it can generate you 5 times, 10 times profit. All right. Okay. That's all for today for support and resistance. And now we jump to the moving averages. Let me just show you the next slide. So most technical traders incorporate the power of various technical indicators such as moving averages to aid in predicting future short-term momentum, but these traders never fully realize that the ability those tools have for identifying levels of support and resistance. As you can see from the chart below, a moving average is constantly changing line that smooths out past price data while also allowing the trader to identify support and resistance. And notice how the price of the asset finds support at the moving averages when the trend is up. Traders can use moving averages in a variety of ways, such as to anticipate moves to the upside when price lines cross above a key moving averages, or to exit trades when price drops below a moving average. Regardless of how the moving averages are used, they very often create automatic support and resistance levels, and most traders will experiment with different time periods in their moving averages so that they can find the ones that work best for the specific task. Later on, when we go to the live chart, I will show you basically okay, I do receive some comments from people. I would like to ask you to ask questions later on. We would be finished with the theory in 5 minutes, and we would jump to live chart and analyze the live pairs on the live market. All right. But before that, I already told you in the beginning, I see that people are joining now, more and more right now, and some of them are late. This theory will help you to understand how do I make signals, why am I considering that euro would go up or down. That's why we basically need this theory to understand those processes. So moving averages, all right, as far as we are at 25 minutes, let me just quickly finalize this. I use 250 moving averages. You can see on this slide that one of the moving averages is 50. This is a red one, and the 200 moving average is a blue one. 200 moving averages have a much greater degree of lag than a 50 moving average because it contains prices for the past 200 days. The length of the moving average to use depends on the trading objective, with shorter moving averages used for short-term trading and longer-term moving averages more suited for long-term investors. The 50-day moving average and 200-day moving averages are widely followed by investors and traders, with breaks above and below this moving average considered to be important trading signal. Moving averages also impact important trading signal on their own, or when two averages cross over. A rising moving average indicates that the security is in an uptrend, while a declining moving average indicates that it's a downtrend. Similarly, upward momentum is confirmed with a bullish crossover, which occurs when a short-term moving average crosses above a longer-term moving average. Downtrend momentum is confirmed with a bearish crossover, when occurs when a short-term moving average crosses below a longer-term moving averages. I would like to share a couple of slides with my comments really quick, 1 minute, not more. So this is basically a bearish trend with moving averages. You see that the 200 moving average stays above the 50-day moving average and the price stays below those two lines. So basically, the system with trading moving averages, you can buy when you spot a bullish trend on the market. So 200 moving average at the bottom, 50 moving average at the top, and the price is above those moving averages. Or you can sell if you spot bearish trend in here. So basically, the next one is the situation where there is no trend in the moving averages. You see that they intercept basically. The next slide will show you another example of the bullish trend. When moving averages go smoothly, yeah, it's kind of hard to determine the trend, but when there is a clear picture and all moving averages are staying in lines like 200 at the bottom, this one at the top, and the price at the bottom, you can say that the bullish trend is there. Another signal is the lines interception. Like in here, you see that there was a bullish trend on the market when the lines intercept and the trend became bearish. You can see on this slide that the price basically tested several times the moving averages, then broke it, and then retested it once again. So before it was a support, and now it is basically a resistance. All right. So far, so good. We have finished the educational part of the webinar, and now let's analyze a live market. Let me open the trading terminal for you. And basically, the first pair which I'm going to be analyzing is British Pound USD. I do use, as I have already said, I'm using two moving averages. One is 200 moving average. It's a dark blue line. And another one is, let's make it a bit bigger. And another one is 50 moving average. Okay. I would also like to use two indicators, basically oscillators. Those are MACD and stochastic. I do have those indicators on all other slides, which I'm going to show you, but I didn't put those indicators on the first slide on purpose, so that you can see how it's done. So what do we see here? We can jump on the daily chart right here. So from the daily chart perspective, what do we see? There was a bearish trend for a substantial amount of time, like from here. It was the summer of 2018. There was a bearish trend, and basically the British pound was going down. But recently, you see that the moving averages, they try to intercept. And it's not a clear order of the moving averages for us to say that there is some exact trend on the market at that time on the daily chart. Basically, the 250 moving average, they intercept, not giving us a clear view on what which trend is there on the market. Then you can jump on a 4-hour time frame, and on the 4-hour time frame recently, I can clearly see the trends, the small trends in channels, like you see in here. It was falling, then it was growing, it was falling back again. And right now, we can jump to 1-hour time frame to clearly view if there are any signals on the market at the moment. Before now we actually analyzing this pair, I'd like to mention that traders should not only now most of the time I'm a technical trader, okay, but there are two approaches to analyze the market. It's a fundamental and technical analysis. So even though I'm a technical trader, and I don't usually pay a lot of attention on fundamentals, but you have to be aware of some important political events which are happening at the moment in the world. By very important political events, I mean it's either the meetings of the central banks or some political negotiations over international trade, or some integrational organizations, or it's some economic reports. So in order to see if there are any important political or economic events going, you have to have an economic calendar. Luckily, on Forex4you website, we have an economic calendar. Let me just open it really quickly for you. That's the Forex4you website. We go to analytics. We go to economic calendar. And basically what you see here, give it some time, is all the economic events which are going to be, let's say, either today, tomorrow, or this week. You can choose the importance. In here, you can see the time, depending on your time zone, the importance of this news, which would have an impact on volatility, and also the previous, the consensus, and the actual figure. As I'm a technical trader, I'm not really interested in those events which have a low impact on volatility. So what I do, I scroll back, I use a filter on maximum volatility, and I click filter. So I see only the events which have a very high impact on volatility this week. So today it's retail sales, which would, let me just filter the time zone. We use a London, but probably you can choose yours. But I'm going to use a London time. And we see that today it's retail sales. If you click, there would be a chart of the previous data and also a description of what is it about. But analyzing GBP today, I would like to pay your attention on the event which gonna occur tomorrow on Tuesday, March 12th. That's the UK parliamentary vote on Brexit. The vote would happen on Tuesday evening after a full day of debate, and it's not, there is no exact time when the vote would happen. We just know that it's going to be the end of the day. I know for sure that it would have a very significant impact on GBP. And even if I'm analyzing and building, charts right here for you and channels and etc., I cannot be 100% sure what would happen tomorrow because of the vote. Basically, analysts expect that the vote would be negative for Theresa May, and the British Parliament would reject the agreement which they had with the European Union regarding Brexit, and this is basically negative for GBP, because if there is a risk of hard Brexit, as they call, so the Brexit without a deal, which would have a very bad impact on the British economy. So if they're not going to reach a deal tomorrow, it would be bearish, definitely bearish for GBP. But on Wednesday, if they don't approve it, and analysts say that they're not going to approve the deal, on Wednesday, it's going to be another vote in the British Parliament of whether Brits should exit European Union without a deal. And this vote, if this vote would happen on Wednesday, it would probably the British Parliament would probably say no, and then on Thursday there is another vote of whether to postpone the exit of Great Britain from the European Union, which should happen on March 29th or not. So basically, for the British pound, I think that it's going to be 3 votes today in the British Parliament, on Wednesday, on Tuesday, and on Thursday. And all of those votes would have a dramatic impact on British pound volatility. So you should keep in mind that those political events would probably dominate Forex market this week. So that's why I'd like to warn you to trade British pound carefully this week. Though the high volatility is good for us because it creates opportunities in the market to make money, but at the same time, it's a very high risk for you to trade a British pound this week. But as of now, from this chart, on 1 hour time frame, basically the British pound is in bearish trend. There is a bearish channel formed. Right now, the market faces resistance area in the form of this 50 moving average. So what is possible for the pair to do now, and what would be my signal? So I do expect the pair in the meantime to rise to the level of this channel, which is exactly one. Let me just draw a line for you. The level is of 131. Okay, that would be the level of the channel. Okay, then what would I do? I would sell from this level with a tight stop loss. Let me show you the arrow down. That's a sell signal. Okay, I would use a tight stop loss, which I would put above the moving average 200, somewhere here. All right. And I would put my stop loss at the bottom of the channel, which is just, let me put it somewhere here. Basically above the lowest low, which was formed here, like that. Like that. So we have, in the case of this sell limit order, we have 80 pips stop loss and around 130 pips take profit, which is okay. As I already told you, I use 1 to 1.5 correlation between stop loss and take profit. So in this situation, yes, that's my signal to sell it from here. Also, there is a possibility that the pair will go down from here, and then I would find entries from the upper bottom of the channel to sell, or if the pair breaks below the lower level of the channel, I would put a sell stop order, yes, below the lower level of the channel, and find a good entries there as well. So, but as of now, I would not recommend anybody to buy the British pound, but to look for sell opportunities and to trade very carefully because of Brexit happening. All right, let's go to another pair, and that would be EURUSD. The EURUSD pair, okay, that's a daily chart. What do we see on the daily chart is we see a very clear indication of the bearish trend. First of all, the moving averages in here, the 200 moving average and 50 moving average, they're sloping downwards, and the 200 moving average is on top, 50 moving average is at the bottom, and the price is below those two moving averages. As well, the price formed a channel. You see a clear channel in here with the lower lows and lower highs, which is also clear indication of the bearish trend. So the trend is bearish. So that we need to find short opportunities on the currency pair. All right. We go back to 1 hour chart. And we see that the situation is basically look alike on the daily time frame. So my advice would be to find short opportunities, either from the 200 moving average, which acted in here, just pay attention, as a support in here until it was broken. So probably right now it would act as a support, as a resistance once again. All right, and we can find the good sell opportunities from this moving average if price touches the moving average, and at the same time this move is confirmed by stochastic right here. So stochastic at that time would stay in the oversold zone. We can sell it. So just let's see, we go for a sell limit order as of now somewhere here. On the level it's 113.11, but I would put it on 113 level, okay? Probably for the price to come here, it would need some time more, and we see that it's sloping downwards, so it will come to this level eventually in, let's say, 6-7 hours. So I would sell it from the level of 113. I would use a thumb down arrow, a sell limit order. The stop loss, which would I put? I need to scroll a little bit down, and I see that there was a good support area which was confirmed. You see right here, also right here it was confirmed, and right here. So this level of 113.23.25, it's a good resistance area for the pair. So I would put my stop loss a little bit above it. Let's say 5 pips would be okay. So 113.30, and my take profit would be at the bottom of the channel, or at least the minimum, the previous minimum, let's say. But basically, I would, if the situation evolves, I would use at the lower bottom of the channel. But as of now, we can see I would put it on the lower low, which is 1176, probably a bit 2 pips higher because we have 2 pips spread. Oops, sorry. EURUSD, there is a 2 pips spread right here. So with the spread, and I would go there. So we have a 32 pips stop loss level, and like 120 pips of take profit level, which is very nice. All right, that would be my view on EURUSD. The next pair to analyze is USDJPY. Basically, there is a daily chart in here. We can also clearly see a bullish channel right there. We can see that there was before there was a bullish trend like here, but then the moving averages intercept and the trend became bearish. And right now the price broke above the moving averages, which suggests us that basically the trend is changing. And if we go on my favorite 1 hour time frame, we can see that the price stays in this bearish channel, and obviously it is better to buy USDJPY instead of selling it because trend is your friend. But regarding this currency pair, I would basically give you 2 signals. So my first signal would be if I buy when the pair tests this level of support. It would, I believe, happen somewhere here at the level of 110, 111, sorry, 111, all right, or a little bit lower, but 111 is okay level. We put a stop loss below this local minimum, as you see here, and below the lower bottom of the channel. I would use a 30 pips stop loss of 110.70, 39.70, let's say, and I would put my take profit on the upper line of the channel. Basically, if I scroll it a little bit, yes, that would be somewhere here. You can use the previous high as well as a, let's say, safe take profit, or a level where you can close half of your position. But at the same time, the major take profit would be right there. So in this case, we have a 30 pips stop loss and how much? 170 pips take profit, which is very nice. So it would be a limit order as well. All right. I would just use an arrow up for you to see where this level is. Basically, it's an okay idea from my point to buy from the current price of 111.8 right here and go all the way up with a tight stop loss as of now. Also, there is, let me delete this position, and there is another opportunity for you to enter a sell order, because we see basically that this channel is working well from the beginning of the year, from the 1st of February 2019, 1.5 months, it's working perfect. But as you know, channels are being broken sometimes, and if the channel is broken, you can go, you can open a sell order. And basically, my sell order would be, if it's broken, what you should do is you either should wait for it to be broken and then retest it, and then you can sell it from the bottom, from the lower bottom of the channel right here, which right now acts as a support. And if it's broken, it would act as a resistance, and then sell it all the way down from here. Or you can sell it right after with, let's say, if it breaks, it don't always retest the channel if it breaks the channel, okay? But sometimes it does. If it does, it's a very good indication to enter your position. If it doesn't retest, my advice would be to sell from this level. You see that basically in here, let me just take it. This level of 110.65 was acting as 165, 160 was acting as a support. In here is a support level. Okay, first as a resistance and then as support. So if price breaks this level, I would use a 110.45 level. Okay, I would sell it from here. Arrow down. Okay, I would use my stop loss above the channel. We need to delete that. Oh, sorry about that. The stop loss would be above the lower bottom of the channel, and the take profit, let me scroll a bit down. So the minimum take profit would be right here. You see that it was acting as a resistance on the chart right here. So I would use that one as my main target, one of the targets. I would have several targets, like the next one would be in here, which was acting as a first as a resistance in here and here, and a support right here. And the very, very, very major take profit would be here. So I would be selling from 110.45 if it breaks the channel with how much, 60 pips stop loss and the major take profit of almost 190 pips, or at least the first target would be 80 pips. Okay, so that's my view on USD Japanese yen. Then we jump to Australian dollar. This is a daily chart. This chart basically shows you a clear indication of the bearish trend. There is a bearish trend on the market. The price is below both moving averages. 200 moving average stays on the top, then 50 moving averages at the bottom, and the price below those two lines. So we've spotted a bearish trend, and we move to 1 hour time frame, and what we see here is basically that the price is going to approaching the moving average, 200 moving average. So the very good signal would be to sell from the moving average around this level, 0.7075, with a stop loss above the previous high, which was, let me see, somewhere this area, but it should be higher than 1.071 area. So probably this one would be even this high if it allows us. How much do we have? Like 50 pips. 50 pips is okay as a stop loss. So above this high, and the take profit at least on the minimum of the previous low, like here. So that's a sell limit order. Let me draw you the arrow down. The sell limit order from here with a stop loss right here, which is 50 pips basically, and a take profit of 70 pips. Yeah, something like that. So basically that would be my advice with Australian dollar and my view on Australian dollar. Clearly that the trend is bearish and we should sell it from here. The next currency pair, is it USD British pound? All right, we can analyze this as well. As I already told you, let's jump on the daily chart. You see that the moving averages are constantly intercept between each other, and for now on, I cannot clearly say that the trend is either bullish or bearish. Though in here we spot, we can try to put a channel right in here, a bearish channel. Let me just put it right here, like that. Yeah. So basically, yes, it's more like a bearish trend sound to me. And if we would scroll back to 1 hour time frame, yes, we would see this resistance level, which was first created in here, tested here, and then retested here. And you see that after the line was retested right here, the price became to drop. So also a possible entry would be to sell from the upper level of the channel right here, put a stop loss above the previous high, and it's better to take a view on this chart as well. So we would, and a round number as well, we can use a round number. You see 8700, so we put, let's say, 5 pips above it, 8705, and the take profit at least on the minimum of those candle, or as a potential on the lower boundary of the channel. But at least the first take profit would be on the minimum of this. So we have a 50 pips stop loss and around 110 pips take profit, which is okay, I think. All right, so that's a possibility, but once again, this is a British pound related pair, and as I already told you, the British pound would be very volatile this week. It's going to be a Brexit vote tomorrow, and probably on Wednesday and Tuesday, Thursday as well. So you have to be careful analyzing and trading this pair, and especially because it's a cross rate. So what else do we need to analyze? Let me see. We would need to analyze British pound, Japanese yen, and gold as well. All right, British pound, Japanese yen. Let me choose this currency pair for you. Sure. Yes, there it is. Okay, the British pound, Japanese yen. We scroll on daily time frame. We see basically that the trend is more like the moving. There is no clear indication of the trend on the daily time frame. We scroll back on 1 hour time frame. As far as I can see, we can build a support level from here. You see how it works? Very nice, just precise. Probably it's even a channel. Oh, that's a very nice one. Yeah, something like that. So it's a channel, it's a bullish channel, of course, and in here the price is in the channel. According to moving average, it's it's not a bullish one, but the channel kind of suggests us that we need to buy. So once again, as with the situation with USD, Japanese yen, I would advise you to buy it from the bottom of the channel, right here, somewhere here, like on the level of 143.90. I would recommend it to buy arrow up, and I would put my stop loss below the lowest low, and probably take a look at those even several lows, because sometimes in this situation you see that the channel and the support levels, they work precise, like pips to pips in here, right? But sometimes there are candle wicks, and those candle wicks can be 10, 15 pips, and it's very not good when the candle wick triggers the stop loss of your order and then goes on the direction which you were thinking it would go. So my advice would be to take a look at the previous history of chart and see like the local extremes and put your stop loss below this extremum. Like in this situation, it's below this extremum at least. So it would create as a 70 pips stop loss, and I would buy it from, let me show you right here, and go all the way up, at least to either the moving average, the 200 moving average, or even the upper boundary of a channel, which is the order of 70 pips stop loss and almost 300 pips take profit, which is very nice from my point. But there is also a sell opportunity if the price breaks this, you see, support line of the channel, then we can sell. And that would can happen because of Brexit, and I've told you that there's going to be negotiations this week, and you should pay attention. You see that this line acted as a resistance in here and in here. So we basically sell below this level, below it, we put okay, sell. We put a stop loss above the higher high of the channel, because if price breaks, it can retest the lower boundary of the channel. So we're not gonna, you know, put a very tight stop loss for it to trigger. We're gonna put it higher than the previous high, and you see higher than this local extremum, probably like that. And the take profit would be minimum the previous low of the channel. So this trade, if we sell, if the price breaks below this channel, we sell. It gives us, oh, the stop loss would be 130 pips, which is a lot, but around 210 pips of take profit. Yeah, this is a high stop loss from my point of view. You can make it smaller. You can make it smaller, obviously, but at the same time, you risk of it triggering. You can move it, let's say, 10 pips above the upper boundary of the channel. But in here, you see that it acted as a resistance zone in here, and it's very likely that the price will touch it. Like it breaks below the level and then it retests, and it probably will touch this level. So my advice would be to put a higher stop loss in here. So, all right, we have another currency pair, not even a currency pair, but gold to analyze. Let's do gold. We scroll back to 1 hour daily time frame. Now we can also build a channel right here. Okay. All right. And something like that. Yeah, probably like that. So you see that there was on a daily time frame, it was a bullish channel right here from the beginning. Oh no, actually from the November 2018, there was a bullish run on gold, but this bullish run was stopped on February 28th, correct? All right, it broke the channel and it went all the way down. It's kind of interesting for me to take a look. Basically, in this situation, you see that it didn't retest the channel, so the impact and the volatility was so high that they pushed the price below the lower boundary of the channel, and the price went all the way down. So like in the case with the British pound, Japanese yen, as I told you before, let me just open the chart. So it would be a good entry. So just imagine it pushed below the lower level of the channel and it went all the way down. All right. Like it happened in this situation, just exactly like that. So right now, we see that on a 1 hour chart, this is bearish trend in gold, and it's good to find sell opportunities for this pair now from the 200 moving average, as I think. And in here, it was a very nice opportunity. Like you see that it almost touched. There was probably like 2-3 pips difference. Yeah, 6 pips, whatever. Difference between the price and the moving average, and also the stochastic touch, the oversold zone. So it was a good signal, good indication that you can sell it from here. But as of now, my advice would be you wait until it touches the 200 moving average. You put a stop sell limit order in here. You put a stop loss above the highest the previous high, and also you see the round number of 113. Yes, 1300. And you put it a little bit higher than the previous high and the round number. Let's say I think that 1301 would be enough, probably 1301.50. like that. And the take profit would be somewhere in this area, which acted as the major local support zone. Right here, you see that it bounced from here, from here, from here, from here. So this is a level of 1284, let's say 84. Yes, something like that. So you have a very nice stop loss of 32 pips and the possibility to enter a trade with 140 pips profit, which is also very nice. Yes, if the trade breaks above this 200 moving average, we can look for bullish entries if it breaks above, and then I would like to see a retest of this level once again, and to look for bullish opportunities from there. So just imagine the price breaks it above, we wait for a retest, it retests, and then we buy. All right. Yeah, that's my view on the gold as well. There are basically more pairs that we than we were planning to discuss. But if you have any additional pairs that you want me to analyze right now, feel free to ask questions in the question section, and I would be happy to answer those questions for you. All right. So guys, please feel free to ask any questions you want regarding the educational part of the webinar or live analysis if you want. So feel free, I'm here for you. And I'm just reading some comments. Those are not just the questions, but comments from different people. Okay. So one of the people is asking, so you would not recommend to trade GBPUSD this week at all? My recommend, as I already told you, I'm a technical trader, so I prefer to rely on the technical indicators like the support and resistance and moving averages. I can see a clear picture. Let's see the gold chart, right? Let me just use a 4-hour time frame. There is a very clear picture. So there is a bullish trend. It touches. If there is a confirmation from stochastic, I buy. If there is no confirmation, I don't buy. Or if we trade in corrections, we probably could have sold it here and wait for another boundary of the channel. From my point, it's very easy to analyze chart with those technical tools which I have, and for me it works. But with the political events and some economic releases which I don't have insights on, for me it's very hard to say. What I'm sure is that with the British pound, it's going to be a lot of volatility. Volatility is a synonym to opportunity. Opportunity is the possibility of profit and loss. So this week, there is a very good opportunity to make money on trading GBP because it's going to be a lot of volatility. At the same time, there is, let me just scroll back to GBP. Oh, you see what it did? When we were analyzing in other pairs, the currency basically almost touched my sell limit order. It almost touched my sell limit order, and immediately after it went back. I wouldn't say that I have sold it. I didn't put my sell limit order, but if I was, I saw a level of 30.95, I would have sold it because it's almost, you know that in these situations, it doesn't have to even precisely touch the level, but Sometimes 5-7 pips difference is okay. I would have imposed my sell limit. Probably it would give you an opportunity today as well later on, but I would have sold it with the take profit in here and stop loss in here, which from my point is a good position. So jumping back to the Brexit, I don't have insights on how they're gonna vote. Analysts say that they're gonna vote against the deal with the European Union. But most analysts, they were saying like 55% 2.5 years ago were sure that the British people would vote against Brexit. They're gonna stay in the EU, and I believe those analysts. Me personally, I lost a lot of money on Brexit because later I was awake all night. I was looking at the chart. It was going down. The British pound. I can basically use a daily chart to show you this very dramatic candle for me. It was 2016 that you would immediately see it, this one. Yeah, I was awake all night. I was looking at the chart at the British pound like falling. I was believing analysts that they said like more than 55% would vote against Brexit, and I was buying. I thought, okay, analysts said that they're not going to exit the European Union, so I'm going to be buying because it's going to grow. And I was buying here, then here, here, and here, and eventually I saw the results of the vote, and I had to close my position, losing a lot of money. So I don't have insight on the political events. I don't know how they're gonna vote tomorrow, how they're gonna vote on Wednesday or Thursday. So I cannot say that you should buy or sell because of this information. What my strategy is that I stay away from a currency if there is urgent, uncertain political event going on. Because you know how politics work. You never know what they're going to say. You never know what they're going to do. And especially you don't know how the market would react to these types of news. So if you ask me, what would I do this week with the British pound? I would not trade the British pound at least tomorrow. Yes, like that, or GBP related pair at all, because I don't know how they're gonna vote. All right, hope I answered your question. But at the same time, I do agree that this is a very good opportunity because it would create a lot of volatility, and volatility is money. Okay. Are there any other questions? Feel free, guys. I see that you are here. So if you want me to analyze any other currency pair, or you have a simple questions about the webinar content, or even about Forex at all, feel free to ask. All right. We don't have any additional questions, so that is why I would like to thank everybody for visiting webinar. Let me just open my last slide. Thank you very much for visiting webinar, live analysis webinar. I'd like to remind you that we have an educational series of webinars. The next webinar is going to be this Thursday, same time, your local time, because people from different countries watch us. Feel free to register for the educational webinar, which is called How to Trade on MetaTrader 4, and visit the webinar on Thursday. And also next week on Monday, we would also do a live market analysis. And regarding Brexit, it would be well known what they decided to do, and we can freely analyze the dynamics of the British pound and probably make money from trading with this currency. But all right, guys, thank you very much for now, and I wish you a very profitable trading week ahead. See you soon. Bye bye.